Okay, there you go. I'm going to start that there, and then we'll just let everyone join for a couple of minutes.
Thanks, Sam. Good morning. If you're joining us, feel free to use the chat to let us know your name, where you're joining us from today, and the organisation you're part of, your role, anything like that. We'll just wait and see if we have some more people joining us. And we'll start shortly. Sam will give us the thumbs up when to start.
Okay, I think we'll get started, and then I'll admit people as they join. I think we should have one more.
Great, thank you very much, Sam. Hopefully everyone can hear me okay. I'm sure Sam will let me know if not. We're here today to discuss the topic of green finance, better banking, as we've called it in this presentation today. We're thinking about how we might be able to green our business banking and some of those financial products like pensions and investments as well. We'll sort of touch on, but mainly we'll be talking about our business bank accounts and our pensions. You can relate these to your personal accounts too, so it's not too specific, but you will definitely have some specific things that you'll need to consider for each of those in a different way. So I'm just going to flip the screen here. Great, so a little bit about us. We are Bold Green Strategies Sustainability Consultancy, and we are also a Southwark-based business. We are in East Dulwich, very close to Peckham as well, in South East London. We work with businesses on a range of projects, but for the most part, we work on B Corp certifications, ISO certification. We work on net zero strategies and implementation. So that will be the strategy side of it, but also the carbon footprint and the reductions. How to get there, setting the KPIs and things like that. We do a lot of impact reporting as well as part of B Corp, but also just generally to help businesses talk about all the great things they're doing and how they're tracking things. We also do carbon literacy training, mainly for our specialism, which is in hospitality, but also for museums, culture, heritage. I'm Nash Girak, and I am the founding director of Bold Green Strategies. You'll meet Ange shortly. He's my co-director, and his specialism is in architecture. He's a registered architect and is therefore our materials specialist and advisor there as well. So just a couple of names that we've been working with over the last few years. For anyone that's unfamiliar with these businesses, you may not notice that there is a theme here. Most of them are in hospitality, events, venues, events production. We also have a food broker as well now. So lots of foodie things which we love. So that's who we've been working with recently. Mostly London-based businesses, but some outside now. So we've got to start the session today just with an important disclaimer. So this session really is here to provide you with that general guidance only on sustainable finance principles and market trends. This content does not constitute financial, legal, or investment advice, and we always urge you to consult an independent FCA registered financial advisor or relevant professional for specific business needs and before making any financial decisions. So just want to get that out there first. The primary goal of this session today is so that we can really identify what the risks are around finance, but also where these can be flipped into a positive by taking action, potentially even transitioning your bank accounts and your pension schemes for your company. So there is a way that sometimes people talk about this as a kind of dirty finance. And what we want to do here is really look for that credibility to be able to align our savings, our business finance with our values. So what we're going to do here is share a few ways to spot those genuine ethical providers and to avoid greenwashing. It's important to say here as well that nothing's perfect, nothing's ideal, and also things change. So, we'll be sharing what we feel is relevant today, but it's one of those things that we really advise that you review regularly. So maybe annually as part of your business objectives, your annual reviews, make sure you're always looking and checking some of the documentation for who you're with. Places will normally notify you if they're making any changes, but sometimes we don't always get around to reading those documents and agreements. So what we're thinking about to begin with is the hidden footprint of our finances. So our financial decisions, of course, they are a powerful but really often sort of invisible part of your business's total environmental impact, which will come under your scope 3 in terms of your carbon footprint. So what happens is your bank, they use deposits to issue loans and to fund projects. And our pension providers invest contributions in companies, unfortunately, often those that are financing that fossil fuel expansion and deforestation. So to give you an idea of scale of this, a typical FTSE 100 company, the emissions from its pension investments are over 7 times higher than its own operational emissions. So just to give you an idea of this, we're going to just play you, we're going to put a link in the chat of a Make My Money Matter campaign. I'm going to give you about 2 minutes to watch this, if you just watch this on your own screen, and we'll come back in 2 minutes. But this gives you an idea of how our finances are linked to those things. So I'll just mute for a second and I'll let you watch that. If you give me a thumbs up in the chat once you have seen it, that would be great. Great. So thank you for putting the thumbs up to show that you've seen it. Now, if I could show you every video from the Make My Money Matter campaign, I would. I find them really engaging, compelling. They use relatable and, kind of quite sort of clever scenarios. It's interesting how Make My Money Matter, who I'm going to talk a bit more about shortly, really use the medium of film to share their message. They are very linked with Richard Curtis, the filmmaker, so that explains why they have lots of people. I would say it explains why they have people like Olivia Colman, Benedict Cumberbatch, Rose Leslie, Kit Harington in their campaigns, and the wonderful Ambika Mod, as you saw there. So hopefully that gives you a flavour of the session today. And feel free to, again, share any thoughts you've had in the chat after watching that, because I always like to hear what people think. So moving on with the rest of the presentation, we're going to start with this idea of a leaky bucket. Basically our finance can be when they're invested in your typical banks and pensions, they can be something of a sustainability saboteur. And often we are now hearing, for anyone in the sustainability space, they use a term called divestment. So if you're divesting from fossil fuels, that can mean, that you're just not using fossil fuels, whether in your vehicle, so in a more tangible way, but actually it can also relate to financial products that are also linked to fossil fuels. So it's a really interesting term. So rather than investing, you're divesting, you're trying to move away from that. So thinking about that, most of us who are somewhat familiar with sustainability, we think about really reducing our scope 1 and 2 emissions, our operational emissions, our energy use, that kind of thing. But if your bank is depositing, if your bank deposits, are in fossil fuel projects, they are actively financing new carbon. So an analogy that we are sharing here is, imagine spending all year cycling to work, recycling diligently, even buying offsets for your flights. You're actually paying for ways to remove carbon. But meanwhile, you're going about your day, and in the background, your pension pot is quietly investing your savings into new oil exploration. So you're effectively paying someone else to add carbon. This is what we are calling the sustainability saboteur. And the only solution is to stop the funding by choosing to divest from high carbon finance. So a lot of people are not aware of this link. Some people who've done our carbon literacy course and things like that will be familiar with this concept now, but it is a tricky one to untangle yourselves from, and even more so for a business, actually, I would say. So again, hopefully able to share some things with you today to help you investigate that and possible solutions. But actually, I was also going to say that people, when they find this out, because they haven't thought about it or they haven't been aware of the connection, they're actually really shocked by it. So I think that's why it's a really important topic, and why campaigns like Make My Money Matter are really important, because they really help people to understand that connection, which is not an obvious one for the average person. So the core mechanism, I think it's really useful to understand here why banks do this. So I always like to go back to basics as well, because it's can be quite an abstract concept. So there's the fungibility of money. So once it's deposited, your money is pooled, and it's impossible to link your specific, your pound to a specific loan, but it's all used as the bank's core funding. So that could go anywhere. And then there's the asset liability model. So your deposit is the bank's liability, it's what they owe you, but their primary asset is what they use to lend and invest for profit. So they have this thing called a fiduciary duty, and this has historically prioritized short-term profit and high return activities. Makes sense, right? You know, if money's what you do, and it's really prioritized over that long-term climate stability. So the scale and inertia of this is cheaper and it's simpler to invest in massive existing global funds embedded with high carbon investment. So that's really what we're going to call today like the default bias. So anything that your money is invested in, it will usually be like that unless you actively choose to opt out or move into a different type of fund. You'll see this with things like investments as well. I think people are becoming a lot more financially aware with investments, with products like Monzo having an in-app investments fund. I would say that that's really gained a lot of traction over the last few years. So people are really understanding the differences between the types of funds that you can have and what you're investing in. So why does it matter? So we're going to look at the concept of risk and reputation. So, you know, there's the massive financing. So UK's big 5 banks have funneled 55 billion into the fossil fuel industry in 2023 alone. So that really does undermine global climate goals. To think about what your personal carbon exposure might be, so let's say £10,000 of a deposit in one major bank account, that accounts for approximately a bit over 2 tons of carbon dioxide equivalent emissions per year. So your bank or pension provider's controversial action, so that would be things like funding oil expansion, can really undermine your company's values. To read a bit more about this, I'm sure you'll be aware of some of these things already. Public scrutiny is high, and you also have campaigns specifically targeting institutional sponsorships. So we think of public spaces, things like in London museums, you will see, I won't mention any by name, but there are a lot of protests happening in museums because they're public spaces. You can be vocal there, and they're also talking about things like certain sponsorships that may be happening at certain events or certain exhibitions, funding for museums and things like that, which are, but there's this tension between the values of the museum, the public interest and the linkages there with funding, and also the sponsorship that also allows these places and exhibitions to exist. So there's a real tension there. But it shows how people are picking up on this hypocrisy and are, you know, making their opinions on that known in certain ways by either starting campaigns or also with activism. So there's plenty of news stories to read up on that if you're interested. But the reputational risk here is that if you are a very sustainable social impact forward brand or organization or institution, if you are very visibly working with a bank or financial institution, or even, you know, that's just how you bank and it is in a public report, people might start to ask questions and say, you know, is that really sustainable? So by switching to a provider that is more ethically aligned, you are neutralizing that risk somewhat. I wanted to share just a couple of examples here as well. So Cambridge University has been leading a coalition of universities up and down the UK to switch to greener providers. So that's something that is ongoing, I believe, and you might want to take a look into the conversation around that. But that is definitely an impactful thing that's happening that the Financial Times have been reporting on, because it's a big shift, it's a big move, it's a big institution, and it's very much linked to our, you know, education system as well. I think I even read the other day that there are some universities are actually boycotting certain banks, that people training in finance related degrees are boycotting, saying that they won't take roles at certain banks, which I think is really, really interesting and one to look up. But also, and here's a slightly Southwark based one, 4 Anglican cathedrals, I think in February, been pledging to cut ties with major banks, one of them being Southwark Cathedral. So may need to go and have a little read up on that and see how things are progressing there. So we're going to start by talking more specifically about pensions before we move on to banking. So the fact that Make My Money Matter really lead with is shifting an average UK pension is 21 times more effective at cutting your carbon than giving up flying, going vegetarian, and switching to a green energy provider combined. Now, that is huge, and it's something that we call a passive action. Of course, you need to do a bit of paperwork and organisation to get it started. But once you've done that, and apart from that sort of annual review that I recommend, it's something that just happens in the background. It's not something that you're having to think about every time you're going to have a meal, or feeling guilty about planning or going on a holiday or something like that. So it's one of those things that happens in the background that is really incredibly impactful. So it shows what the untapped influence your financial decisions hold. So thinking about your pension funds, there is a key document that we'd really recommend looking at. So if you have current pension funds, you should be taking a look at the provider's statement of investment principles. This is known as the SIP, and this is the legal document that details exactly what they do and do not invest in. There's something called an exclusion policy, so look for a robust policy on divestment, which we talked about earlier, from sectors like coal and fossil fuel expansion. Now, as I mentioned, the default fund is where you can almost guarantee that this will be the standard fare of that coal and fossil fuel related investment. So check the performance and climate impact of that default fund if that's what you find yourselves in, because actually with the employer, the one that your employer has to set up for you by law now when you start working with them, that always has to be in the default fund, and you can only opt out of it yourself. Your default fund may actually be an ethical or climate related fund, but it has to be the provider's default fund. So I'll explain that a little bit more later, but again, just check it. And then you might want to compare that to something like the ethical or climate funds. They have different names, but you can usually get a sense of what they're investing in by the name. And you should be ensuring that there is at least one transparent, high-performing ethical fund option available for employees to switch to if this is something you're in control of, or you can share that with your employer, because the default fund may be as it is, but at least it saves a step if you're able to let your employees know, yes, this is the default, but we're signposting the ethical fund to you, and it's available to you because your company cannot move that for you. They can only do the ethical fund. So that's a really important point I want to get across today, that if you're going for standard pension provider, just make sure there is an option for them to switch to, even if you can't sign up to it straight off the bat, unless you're going for someone where that is the default. So I want to show you how you can vet your company pension in a way that is a bit easier than reading all of the SIPs of every pension provider. So I have mentioned Make My Money Matter quite a bit, and it's such a shame because they, as a campaign, they stopped. I'm not sure if that's quite the right way to do it, but yeah, they ceased the campaign in 2025, so earlier this year. And we're not quite sure yet whether they're going to keep publishing their tables annually, but they've definitely left up their website, and I think the plan is for them to continue to do so that you can use their resources. They've, again, those really impactful videos that they've made available to download, to share with your employees. Some of them are a little bit well, the fun of them is that they're a little bit playful with language and maybe a little bit risky in some ways, so watch them first, but I'd certainly recommend taking a look at those. But yes, it's a real shame that part of their campaign is over. But again, please use their website resources. They have this climate action report, which I'd love to share with you on screen, but due to copyright, I'm going to make sure you have the link. But download this climate action report. It has the 2025 table of their recommendations of pension providers. It's a scoring table. As you'll see, no one is perfect on it, but it can give you, I wouldn't say best of a bad bunch, but it shows there's lots of room for improvement, and definitely who's doing a lot better at the top of the table than those right at the bottom of the table. And again, this is important to say for them as well. It's an independent climate action analysis. They're not intending this as financial advice, but it's a really good guide, a really good starting point to show you where your finances might be able to align with a different provider. So I'd really recommend downloading that. It's free to download. It's on their website right now. So we'll make sure we put the link in there for when we send out the slides at some point in the next day or two after this presentation. So we're thinking about greenwashing as well here. So we're thinking about the types of messaging that we see from banks especially. So in 2024, the UK's advertising standards banned ads from HSBC and Lloyds promoting climate action. So these claims gave the false impression of net zero alignment, while the banks were simultaneously funding billions in new fossil fuel exploration. So your bank's ethical image can be a major reputational liability and not an asset here. So these kinds of claims are now finable, some quite significant fines as well. I might ask Ange to just share for a moment the kinds of fines. Can you remember the percentage?
I can't remember the percentage, but I know that the CMA, Competition and Marketing Authority, have recently been given greater power so that they can give fines over greenwashing claims kind of directly without having to go through the courts. So things are moving and giving kind of more power to the government agencies to stop greenwashing and punish those that are clearly found to be greenwashing.
Yeah, so hopefully you were able to hear that, because we had a funny thing with our mics there. But yes, that we're seeing increasing power to take for bodies to take action over greenwashing. So it's pretty serious if a bank, I think there's a certain percentage you can fine, and for a bank that would be a pretty significant fine. So I'm not sure if the fines were active in 2024, but it is very much part of a deterrent as well. We see a lot of this when we're looking at fuel companies as well, that I've been hearing on the radio and podcasts that I listen to. There are certain gas companies making all sorts of ludicrous claims that I find really quite shocking that are being aired, and it makes me really quite angry. So just make sure that's on there. Great. So I'm going to hand over to Ange here. I'm just going to he's going to tell you a bit more about the banking.
Hello. Yes, so I'm going to talk about the good, some of the good, or those that are, as Nash said before, it's quite a difficult space to be perfect in. There's a lot of moving parts and it's quite complicated, but at this moment we have banks like Triodos Bank and Cooperative Bank who are consistently placed at the top of several ethical banking rankings like Ethical Consumer and Which and places like that. So they publish clear, customer-led ethical policies that absolutely exclude the lending from high carbon sectors such as fossil fuel expansion, arms and tobacco. So, they're promoting ethical funds and by excluding those high carbon sectors. And they do this through their exclusion policies, and they're very transparent and they make everything very clear on their banks. So you can do your research and you'll start to see how these companies represent themselves and how you can start to spot when it becomes easier to spot when companies are being honest and transparent, and it becomes a bit easier to spot those companies that are greenwashing and making themselves sound more ethical than they are. But just to say that, yes, they can demonstrate that profit can be made without compromising their core values. So these are all successful companies too, and Cooperative Bank have been around for a very, very long time and have maintained their ethical status. But just something I wanted to talk about, to look out for, is this the idea of this nested finance trap. So many ethical challenger banks still rely on high street banks such as NatWest and HSBC to clear their transactions. So this means that when your money is when you deposit your money with them, your money can quite often be routed through a major carbon financier, so such as NatWest and HSBC. So to avoid this nested trap, you need to ask your provider or check with your provider who the clearing bank is, or choose a bank that clears its own funds, so they can do that themselves. It's a bit more complicated. Some have a kind of mixed approach to this, but I have a little cheat sheet for the banking transparency here, but just a quick disclaimer that this information provides general guidance based on public, ethical and operational policies, and it's not financial advice, which is what we said at the top of the presentation. So I'll just run through these quickly, just a few of them, so you've got an idea. So Triodos has their clearing partner, they're self-clearing, they do it themselves, and this is kind of the top level. So the funds are fully ring-fenced and controlled internally and guided by an absolute exclusion policy on fossil fuels and arms. The Cooperative Bank, they're also self-clearing, and they have their own regulatory license that clears their own payments, and it's guided by a transparent and customer-led ethical policy, which is where the name comes from, cooperative. So they are kind of owned and partnered by their own customers, and they have their own say, which is a very kind of interesting model. Then you've got a few of the newer banks. So Starling has its own infrastructure, but also uses some of the tier 1 banks for transfers, the tier 1 banks being the NatWest and HSBC. So it uses its own technology and has an explicit policy of no lending to fossil fuel companies, but there is still that connection with those tier 1 banks that we mentioned. Tide have used Clearbank, which is via the Bank of England. So their deposits are ring-fenced by Clearbank and are not used for lending or high carbon investments. So they're mitigating that nested trap risk. Now Monzo do actually use NatWest and Barclays for their clearing banks. and they rely on the major high street banks for clearing. So they're increasing that nested trap risk through Monzo itself, though Monzo itself has minimal lending. So just talking about vetting your business bank and some simple steps that you can audit your current provider and help you potentially find an alternative if that's what you want to do. So looking at emissions reduction potential, switching from high carbon bank to a climate responsible bank can reduce your related emissions by up to 76%. So it's very significant, and this is why we are here to kind of explain this to you. It's a very, very impactful move that you can make, and as Nash said, it's a passive one. So once you've gone through that initial setup and paperwork, it does the work for you. Recommended alternatives: consult independent reports, such as Nash suggested. We'll share some links for those. Make No Money Matter campaign reports. For suggestions like Triodos, Starling, Co-op Bank, and Nationwide. And you can cross-reference this with the Ethical Consumer for business accounts. Using external vetting, so you can consult Ethical Consumer or Bank Green. So we'll send some links through for these for independent scoring and comparisons of the major banks. Ethical Consumer in particular publishes detailed comparative tables on criteria like fossil fuel exposure and ethical lending. And if it's actually relatively inexpensive to become a subscriber to Ethical Consumer, and you can have a digital or print subscription. But on the digital subscription, as well as having these ranked tables, you can have, they are linked to a company profile, so you can do a bit of they've done a deep dive for you, so you can see a very quick kind of profile on companies if you want to do a bit more digging for your company or personal banking and investments too. The switch, once you decide, the UK's current account switch service, CAS, makes moving business accounts straightforward and guaranteed. The green financial opportunities. Just running through a few of these points. Favourable funding, so access to dedicated green loans, which can provide lower interest rates for verified sustainable projects, which might be energy efficiency or energy renewable infrastructure upgrades, such as solar panels and things like that. So procurement advantage, demonstrating alignment by using ethical banking and pensions strengthens your brand in tenders and supply chain, and that also leads on to the idea of being open and honest and ethical and transparent as a business, and that relating to talent retention. So offering a truly green default pension fund is a highly valued and low-cost employee benefit for attracting and retaining values-aligned talent. So or a case study that we just wanted to share with you, that something that happened recently. If anybody knows, the House of Hackney interiors business and shop in London. They're a B Corp, and they needed to align their ownership with their regenerative mission, and their private equity investors focus on high short-term returns clashed with their own long-term restorative commitments and their own kind of mission. So the two didn't align, and they wanted to do something about that, and they tried to work with their private investors. So instead, using Triodos Bank's crowdfunding platform, they successfully raised millions of pounds via bonds to buy out their investors. So it was a successful campaign, and it was really impressive and shows what you can do. When you seem to feel like you hit a brick wall with these things, there are lots of innovative options out there, and Triodos are really leading the way with these things like their crowdfunding platforms. And this secured their purpose and proved that values can and must dictate financial structure.
So some practical steps to transition. Address the relationships, acknowledge that long-standing relationships with banks start with a phased audit rather than an immediate full switch. So following these steps, we've got an action plan worksheet to share with you at the end of the presentation, and we can also share that with you following the presentation for you to have a look through and help guide you through things we've discussed today and how you can step by step make those changes yourselves and for your company. Internal communication. If you keep a standard pension, run internal campaigns to encourage employees to switch funds voluntarily, you can use that 21 times effect to show them the impact of this small change and hopefully guide them to show them that it's quite an easy switch to make. Use engaging content like the video we shared earlier, and others. You can have a look through those. There are plenty of good ones out there to drive uptake within your business. Seek expertise, so don't navigate this alone. Consult with an FCA registered financial advisor who understands ethical finance, and that's quite important as well. Somebody that has a knowledge of this area of green finance. Audit and govern. Appoint an internal champion, usually somebody within finance, HR, or sustainability, or maybe a mixture, quite often, to appoint the SIP annually as a governance checkpoint. So checking in, making that something you do annually as a business, just to check that everything's still aligned with your values. Expanding financial stewardship. Using your business's collective voice to influence and engage providers directly, joining campaigns like Make My Money Matter, publicly pledging your support for things, and that helps your business brand, but it can also help support other businesses in your industry. You know, if you can lead the way and show that how things are done, other companies can see that it's possible, and they will pick things up and hopefully follow suit too. And empower employees, so turn financial decisions into a team-wide initiative, empowering staff to engage their personal pensions. So you can workshop and make it engaging rather than just providing information. Really engage with your teams. Policy alignment, so position responsible finance as a key deliverable on your company's net zero roadmap and broader environmental policy. So you can develop your own exclusion policies as a business and state what you don't want to invest in or don't invest in as a business, or you can set targets if it's not something you feel that you can achieve fully in one go. You don't have to be perfect in one go. You can work towards things. It can be a staged and phased approach. So just wrapping up conclusions and next steps. Responsible finance is the ultimate strategic decision for a purpose-led business. So audit. Identify your current bank and pension providers. Look at those SIPs, look at the ESG reports, have a look around at what people are saying about those banks and what's the news and what they're trying to do and what they're promoting and what's their visibility and transparency. Research. Use the independent resources shared today. So Make My Money Matter campaign, the Ethical Consumer and Bank Green. And then plan, consult an independent financial advisor and begin drafting your transition timeline. So we can now take questions, I think.
Sorry, just checking I've got the screen working, but it's not moving. Can you just check for me? Great. Yeah, so I just wanted to so I hope you can hear me. Just wanted to signpost some useful resources as well. Sorry, just a second, we'll need some. Yeah, so one place to look for banking is Bank Green, which is a website that you can use to go and look at that. And we also have the Make My Money Matter campaign, which again I mentioned is full of lots of useful things, especially up to this year. It should still be quite useful, and fingers crossed that they may still pop things up annually, which would be great. But failing that, it's also very much recommended by us to take a look at Ethical Consumer magazine. Now, again, we're not able to share their specific tables in the presentation, but for a subscription price, I think it's very reasonable. I think it's like £34 or something. I know it sounds quite specific, but for that, you can actually just have an online only subscription, but they can send you copies as well. Sometimes it's quite good if you just want to sort of sit and pore over something, but they update their tables, I think, almost daily now. I think that's changed. It used to be annually, but I think they've found a way to update things more regularly if things change in a more of a real-time way. So they have themes to their issues. It can be about your current account, savings account, mortgages as well, because we know that's a really important one. And when we're talking about personal finance, we do know there is an advantage to having a long-standing relationship with a bank and things like that. So these are all things to think about, and it's just to give you the information to make your own informed decisions. What's important to you? What we've shared today might not be what you're looking for, but it might in fact very well align with your own values as a business and or personally. So yeah, Ethical Consumer magazine will also give you like lots of other tables on things like what's the best plant milk to have, or the best chocolate to buy, because there's lots of human rights issues, fair trade involved in that as well. So good as an all-round resource rather than just a financial one, I would say. There's also a Good with Money website as well, and they have something like a good egg rating for for rating financial products. So something to get you started with there as well. So what we're going to do is we're not going to go through this in real time today, but what we'll do, because normally if this was going to be in person, we would send out this sheet as an action plan so that you can work through some ideas that you've had in the training today. So at some point after this presentation, I assume maybe Sam will send this through with the slides for you, with a few questions on there to define your why and some SMART objectives for you to go through, and what your long-term plan might be as well. So if that's something that you'd like to do as well, we'll make sure that we send those over to you post session, and hopefully that'll be useful. You can share it among your teams as well, of course, we don't mind that. But that was everything from us today. Happy for you to contact us and take a look at our website, but we are doing a couple more sessions for this project. We're going to do a replay of our B Corp and ISO session, I believe in January, and I think in February we're doing a new session around demystifying Scope 3. So do keep your eye out for those, and hopefully we will see you again. Sam, do you want to thanks, Andrea, and nice to see you, Andrea. I remember you from carbon literacy training. But Sam, do you want to say anything at all before we go?
No, nothing further. Unless anyone has any questions before the end of the session today, I'll send you guys an email with everything in, with Nash and Angie's email, so you can get in touch. Yeah, apologies for that with the chat being hijacked. Unfortunately, because these are open, we can get people joining. But
I wasn't so sure about the diversity comment given my own background, but anyway, a lot of assumptions being made, I assume. So
apologies for that.
Thank you everyone for like sticking with us. So thanks so much, everyone.
Thank you for that. Yeah, apologies again. It happens occasionally. It's a heated topic when it comes to climate change. But no, unless anyone has any questions now.
No.
Right.
We're all good. But anyway, you're more than welcome to contact us if you need to, and do keep your eye out for any of the other sessions from the other providers for this project, because there's lots of great training and sessions there. So yeah, support the project and come along and learn a few things and share some of your own experiences. It's a shame we weren't able to see you in person today, but thank you for being flexible as well. Thank you.
Bye.
Thank you, everyone.